What's up everyone, it's Kadi with Money Vesting. So in this video, I wanted to talk a little bit about Meta and not Mark Zuckerberg, but Market Zuckerberg, because I feel like there's been a very subtle difference in the tone, the announcement, the notes, because I've been an investor in Meta for a long time, so I can pretty much tell when things are shifting a little bit. And in the last few months, we have seen a lot of layoffs, right? Less expenses in the metaverse, and we've seen obviously a lot of cost cuts with Meta as well. Now I know Mark Zuckerberg is not the most liked CEO or even the person in the world. I totally get it. I'm with the sentiment here. However, I'm gonna go over another interview which was done between Lex Friedman and Mark Zuckerberg. So I highly encourage everyone to check that out. I'll share the link maybe down in the comments, but it was quite a funny yet interesting video on censorship, on AI, on the metaverse. There's a lot of detailed, questions asked by Lex, so definitely check that out if you haven't already. But Meta here exceeding $500 billion in market cap for the first time in 9 months. Today it was up over 7% and crossing past $194, $195 and almost getting up to $200 per share. Trading above the moving averages, market value is back above 500 billion. So definitely the stock is doing really well. In fact, it has done so well. It is one of the best performing stocks since November, right? November of last year, 2022, it has done like really good. It's up 123, 125%. So it's like more than doubled in that time frame. And I think a part of that reason is because Mark Zuckerberg is now starting to really listen to what investors really want or what Wall Street is really looking for. And I've mentioned my market update. I kind of briefly went over that, but there's a pro and a con with that. And I'll go over that here in just a minute. But Facebook parent company Meta announced another 10,000 people getting laid off here. So another mass layoff of 10,000 people. And he pretty much mentioned at this point, I think we should prepare ourselves for the possibility that this new economic reality will continue for many years. And he also mentioned that the higher interest rates led to the economy running leaner. More geopolitical instability leads to more volatility, and increased regulation leads to slower growth and increased costs of innovation. Zuckerberg wrote on his Tuesday note. I don't know about you, but a lot of CEOs don't talk about interest rates, volatility, and just, it's a more market oriented tone. Like, I don't know, like if you kind of read that note, it's got a more connotation that's more market oriented as opposed to anything else. Because sure, I mean, CEOs do talk about potential recessions and consumer spending. They do dive into a little bit of the more macroeconomic factors, but talking about volatility and higher interest rates expectations, that's more of a market type of view on the company itself, right? So again, you can see that he pretty much know that on Tuesday, and which is also posted on Meta's corporate newsroom. And he also says, and I quote, "Given this outlook, we'll need to operate more efficiently than our previous headcount reduction to ensure success." So they are cutting another 10,000 people, and that's going to reduce their cost even further. That's billions of dollars pretty much in savings. But the question that I have for Meta is that can they keep growing? Can they actually keep growing? Because if you take a look, revenue was pretty flat, right? So year over year from 117, 118 billion to 116 billion. So we were pretty flat on a year-over-year basis. Gross profit, again, very flat from 95 to 92 billion. Net income obviously dropped quite a bit. Operating income also dropped because of the heavy expenses, stock-based compensation, everything that the company was building, 46 to 33 billion. And the bottom line is net income was pretty much dropped from 40 billion to $23 billion. So still profitable, still one of the best free cash flow yields out there. Valuations moved up a little bit on the higher side. I've done videos on Meta in the past talking about how now is not the time that we can actually consider Meta to be undervalued. It was when it was at 80, 90, $100, but now it's like, more than doubled from those levels. So the question really is that after these cost cuts, yes, Meta is going to save a lot of money. It's going to help their bottom line and earnings are going to grow. But can the company actually keep growing revenues, free cash flows, gross profit, operating profit, and everything else, right? So I think it is a very, very lean efficient operation now. I think Mark Zuckerberg is going to be a lot more focused on the core business. In fact, in that video that I'm going to go share in this video, by the way, make sure that you do check that out. It's about 1 year ago, so it's been a while. But he does talk about, Meta, Facebook, Instagram, the metaverse, really, in detail podcast, 2 hours long. For those of you who don't know Lex Friedman, he does a lot of podcasts on YouTube with a lot of known celebrities, CEOs, athletes, just, a lot of people out there. But that was a really interesting yet fun interview. So in my opinion, I think Meta is kind of headed in this direction where core business, core focus is going to be there. They're going to still be able to monetize and expand their user base. I mean, they've already kind of capped out at so many people, billions of people using their services and applications every single day. And I think that's going to continue where the focus is going to be there. But the metaverse operation is going to be more on kind of like the back burner, so to speak. They're still going to be focusing on that. I think that's still going to be, money is still going to be spent on those operations. However, some of these other special projects are going to happen at a time when the economy is in a much better place. But there's definitely been a bit of a subtle change here in Zuckerberg's tone over the last few months. I think he's given investors in Wall Street what they really wanted to hear: layoffs and cost cuts and less expenditures in the metaverse. And the stock price has been rewarded for that, right? I mean, we've come from like less than $200 billion to now well over $500 billion and 123% rally. And I think if this continues, it's possible that we see it north of $200 per share for Meta. So wouldn't be surprised if that happens. I will be looking at the options chain for Meta. 38 days out, 45 days out for some covered calls, because I do have a pretty sizable position. So we'll be looking at some of those strike prices, because, I've got like 600-700 shares that I can easily get rid of by selling some calls and also generate some premiums. So that is going to be on the horizon for Meta with me personally moving forward. But this is a very strong move, of course. Now talking about the technicals, we did come down. This is a gap on the downside that Meta may eventually need to come down and fill in. That's going to be sitting roughly in the 150s and 170s. And we've also got a pretty substantial gap on the upside between 250s and 290s. So this right here are two gaps that Meta has, both on the upside and on the downside. But intraday, we're going to be focusing on that next resistance sitting roughly at 198 to as much as $200. That's exactly where we got rejected here in the past. That's exactly where we got rejected back in June of 22. And then all the way up to as much as $222. This right here is going to be that next level to watch for Meta. So let me know in the comment section down below, what do you think? In my opinion, as I mentioned, we have pretty much turned from Mark Zuckerberg to Market Zuckerberg, focusing a lot more on the stock price and the market cap. And the pros and cons really are: the pros are that investors can be rewarded. I mean, it's good for restoring confidence, make sure the price is stable, all those market related events and things. But the cons are really, I mean, sometimes you may have to go against your own vision, your own guidance. Like, even if Zuckerberg wants to spend a lot of money on metaverse and wants to see it through and wants to keep building it, there is going to be that pressure, additional pressure from investors coming in that, look, you're just spending money, you're just burning money. Even though a small part of me does believe the metaverse is going to be huge, because a lot of companies are focusing on that. Apple is, Google is, Microsoft is, and they're all building their own hardware, applications, and software and whatnot. I do think it's going to be much bigger, but it might be the timing issue where Meta is spending a lot more money too early to not really see the return right away. And that's why investors might be a little bit disappointed if we are seeing consistent cash burn with the metaverse project. So let me know in the comment section down below, what do you think? As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel, and also a link to our Discord and Patreon is going to be down below. Very strong move, 7% move to the upside for Meta Platforms. And again, one of the best performing stocks in the last 4 or 5 months. Just goes to show how quickly things can change in the markets, right? They're very dynamic. Anyway, happy investing, and I'll see you all in the next video.